Hey folks, Mark Scroggins.
Andrew Johnson here.
Back for another episode of Love and Money in Texas.
Indeed.
So we got there's a lot of stuff going on in the economy right now. All this crap with Russia and the Ukraine, and not to mention the Fed and interest rates and, you know, everything that's going on. I mean, you know far more about this than I do because we're getting a little bit beyond what my pay grade is. So can you talk a little bit about how... I've never had a complete understanding of, so you've got something that's going on the other side of the world, and our stock market freaks the hell out. You know, and all I know is I'm looking at my investments and going, really? 500 down again? What's happening here?
Well, I think there's a lot to think about in terms of how geopolitical events really affect us as just consumers. You know, we spent what some would call $6 trillion a few months ago on combating the coronavirus. And man, that's certainly having some implications. And Russia has certainly caused quite a bit of stir. And the markets typically don't like unrest.
Right. Yeah, absolutely.
So we're looking at something where they say, hey, look, we have a ability to have a land grab. Russia feels very cornered by a lot of the political initiatives of NATO. Right. And so, you know, they even said that if Ukraine were to join NATO, right, he would resort to a nuclear option, which is insane. I
had not heard that.
So, yeah, there's been some pretty scary rhetoric coming out of Russia. And I always believed that Russia was going to invade Ukraine, even though they, a few days ago, said that they're going to back down. This is just very typical scare tactic Russian things to continue adding troops to the border and making things worse. But in answer to your question, I think that our pocketbook is being felt because markets just don't like instability. They don't like the unknown. And oil is a very, very big unknown for us as a commodity because we still consume a lot of petroleum products, and a lot of petroleum comes out of Russia. So we have threatened economic embargo to them if they invade the Ukraine, and they're probably going to do it. So this Cold War tensions are coming back.
So let me ask you this, and I don't know. I mean, we've talked about it, and you know, I've actually been over to Kiev, and it's beautiful. It's the most alone I've ever felt in my life because I could not, you know, you look at a billboard if you're in Mexico or France or one of the Romance languages, sure, right? And even though it's not English, even if you don't speak another language, you can figure out some of the stuff. But you know, if you've got a letter that looks like a trident, you know, there's no sounding that shit out. I'm just like, no idea.
The Russian mark is no good.
That's right. Exactly. That's exactly right. So, beautiful country. But from what I saw anyway, although I stayed, so the company that was hosting me, there was another, they called it a resort. It would not exactly be a resort as we would think about it, you know, in the West. But I will never forget this as long as I live. There's another one across the highway from us, okay? And we're on the outskirts of Kiev. Okay. Two huge Mercedes limousines standing out there, and guys with submachine guns. Now, I'm not talking Kiev army. I'm not talking the Russian army. I'm talking... Oh. Yeah, exactly. Wow. Some of the Russian you know, crime figures there. And so I'd asked my host, exactly, what's going on there? They're like, oh yeah, that's like one of their hangouts. And I was like, yeah, I think I'll stay on this side of the highway. I'm good.
I'm glad you came back to us. That's good.
Exactly. But my question, actually, long-winded as usual. I know that comes as a surprise to people. So I remember when Russia annexed the Crimea, right? Sure. So, but I wasn't, I'm not aware, and maybe you know more about this, but what, if Russia goes in and invades, I mean, clearly, you know, if I was Russia, I would be a little nervous if I had my enemy right on my border loaded up, right? All you have to do is look back to the Cuban Missile Crisis. You know, why did that happen? Because they parked missiles 80 miles off our shore. So we're talking about kind of the same thing with NATO being in the Ukraine. And, you know, you used to have the Iron Curtain and, you know, all the satellite countries. I realize that's before your time, but
I know how to read history. Thank
you. But what are the natural resources that Ukraine has that would are there much in the way of natural resources that would really impact markets from that standpoint, or is it just the volatility of that and what the domino effect is of embargoes and other sanctions?
I think that for Russia, this is more of a power grab. Putin is kind of becoming, whether you call it senile or not, in his ability to grab for more power. And he is tired of Russia falling into a firm third or maybe fourth place on the global stage and wants to assert dominance. So I don't know if Ukraine has a ton of globally relevant economic implications of being overturned, but really just the general idea of instability in the modern age is what makes people scared. You know, you have in the Russian theater that you have all these land grabs happening. In the Chinese theater, you have the constant threat of Taiwan being taken down. And then there's a more derisive America at a domestic home front in terms of just political ideologies,
right,
like we haven't seen in my lifetime and much longer in your far older lifetime, as you previously underwrote
right
here. So
yep.
I would say to you that I think that the market's been good for so long, and we've had all this stimulus. So that combined with having prosperity for so many years of a 10-year plus bull market
right,
has created this powder keg environment. And sometimes the market, in my experience, looks for these sentiment-driven events just to start making noise because they get nervous. Like we've had such a good run for such a long time. It's time to perhaps start to sell off, and people want to have a sell-off so they can put their cash to work because in my generation and your generation combined, there's over $3 trillion of cash in the sidelines right now in retail investor accounts.
Right.
And that's a lot of money.
No kidding. So let's kind of talk about this a little bit. So when you've got a situation like that, even getting into a bear market, okay, what are the types of investments that you generally see people getting into that are going to be less risky, but where you're not just, it's not the same as you put $100 under the mattress and you get $100 out in 20 years.
Sure, 100%. So one of the biggest asset classes that is usually dogged on, and I usually dog on it myself in most parts of the cycle, is gold.
Right.
Gold as a commodity is actually a phenomenal investment in a rising rate environment combined with a look at the stat here, the manufacturers production index. When that's declining and rates are increasing by the Fed, gold historically has outperformed the S&P by like 10 to 11%
right,
on an average annualized basis. So that's dramatic. And just to kind of frame where a lot of the professionals in the money market managing world are looking at where the market could be.
Right.
I think that the realistic scenario where we currently sit, and this is an ever-evolving, changing day-by-day analysis, is that we are not in a big fear of recession mode yet.
Right.
And the general kind of drawdown is that we could see this market maybe losing at its worst between 9 to 11%. Peak to trough this year,
right?
And
you're talking just annually.
I'm talking from a year-to-date 2022.
Gotcha.
But Goldman Sachs came out and they're still signaling and saying that they think that this year is going to be a double-digit positive return.
Really?
They think that 11% is going to be the total return for the year, even getting past this volatility.
That's interesting.
It is.
So it's interesting. You mentioned gold, and does that? So while we're talking about gold specifically and precious metals, does that include other precious metals? Platinum, silver, copper.
Sure, but I think
to a lesser degree,
gold is just the most easily tradable, most recognizable commodity, and it is the gold standard when it comes to a cash safe haven. Those who are fearful of paper-denominated currency that's backed by the full faith and credit of a government, which in some people's eyes is worthless. Gold is a commodity that's tangible and worth something, and just is the kind of the global standard. So when we talk about that, I'd say it's pretty granular and micro to as an investor who doesn't know what they're doing, to just go speculate on commodities like copper or silver. I would stick with gold. And as you and I talked about previously, if you're going to dabble in something new, dabble in a frontier asset like cryptocurrency. Well, so
that's my next question, because there's been a lot of talk because of the volatility in the market of, is crypto and specifically Bitcoin, and I think to a lesser degree, Ethereum, are those the new, gold investments of, what's going on in a bear market?
I think that as the technology continues to become easier for the common consumer to use, i.e. Coinbase, various services like Cash App, Venmo, PayPal offering you the ability to take money to buy crypto directly, and even Coinbase announced this week that you can start doing your direct deposit of your paycheck directly into their service to allow you to just take crypto as your baseline currency, is fascinating. And that is certainly something where I think that a lot of younger people, particularly Gen Z and millennials, are far more interested in holding crypto. But the thing that's a little terrifying to me is that crypto has always been, at least it would like to be altruistically known as an asset class that is not tied or is not tied to the S&P or the capital markets. However, look what's happened today. Ethereum and Bitcoin were off 5% today, respectively, right about there. And the market had a really rough day today, too. So to me, without a long enough sample size, because we're still in this frontier market, we're looking like cryptocurrency is intrinsically tied to the value of the market, which is unfortunate.
Yeah, I mean, it's very interesting because it seems like they are moving in lockstep.
Oh, completely.
Now, I mean, I've been sitting here, watching. So you were a big force in getting me to start putting some money into crypto, which I've really enjoyed, except since about January, and and my stuff is down. But
the race is long.
I know.
I think as I mentioned before, I'm a big believer in systematically investing in cryptocurrency, and this is something where you can actually take a normal dollar-denominated amount, like $10, $100, $300 a week, whatever is comfortable for your income, and just systematically buy it automatically.
Right.
A lot of services will let you do that, and to me, it's the best way to avoid the volatility of crypto, because a lot of people that I know that are very pro-crypto, or even people that are just thinking about future asset allocations, will say that if you were to invest 5% of your net worth into crypto now, it's possible that it could be worth 50% of your future net worth 20 years down the line.
Sure.
Based on where we are in the very, very beginning of this market.
Yeah, and it gets really interesting when we start talking about, altcoins and NFTs and what is happening in the metaverse and all these different, it's very interesting.
It's very stressful.
Very. I imagine from your standpoint particularly.
I'd say that this is like an asset class that just continues to become more diverse. There's just like derivatives upon derivatives. Understanding, it gets really tough as an investor because you're looking at NFTs, you're looking at the value of the NFT, which is denominated in Ethereum or some other asset class like some other cryptocurrency like either Classic or Bitcoin that you can buy these things in, and then you can convert that to U.S. currency, understand its true value. So it moves around a lot. Right. And so I would say that, to me, to simplify this for those listening, buying Ethereum would probably be my number one recommendation. At least that's what I do. I'm not going to recommend what you do for your personal finances. But I think that that's something that I enjoy and I think has a lot of value down the road.
Mira, how are we on time? We're good. So I want to talk a little bit about inflation.
Sure.
Too. Inflation is a mess.
Oh, yes.
Right now, and I don't know. Yeah, obviously you do, but I'm sure there are lots of people out there that are not as familiar with Venezuela and the hyperinflation that they have gone through and all that mess over there. Last 22, 23 years, something like that. Basically, since they tried the socialism experiment, and it was
not very profitable.
Absolutely freaking ridiculous. But can you explain a little bit about inflation and what the impact is on your investments and things that you can do?
Inflation is as real as it comes. I think that's what people have a hard time gripping with, because inflation is around you whether you choose to accept it or not. People who want to stay in cash right now for fear of risk are in a really tough spot, because
you're losing.
Anybody who's sitting in a non-risk class asset right now is losing a tremendous amount of money.
Right.
Our previous kind of average inflation over this bull market has been about 2%.
Right.
And there are some measures that say it's upwards of 7.5% if you look at the consumer price index.
Yep.
Now, I think real inflation is somewhere around 5.5% right now. But if you think about that, the average bond yield right now with where interest rates are is around like 3% for a municipal bond. So that means that if you are a risk-off investor who was forced to go into bonds before this inflation debacle to make a measly 1% of real return, now you're making a real negative 1%,
right,
or 2%, I should say, of real return, and it's very, very traumatizing. So I think a lot of investors are kind of like really digging in and saying, I don't know what to do because their grocery bills are going up, their gas has been wildly out of control, and even the price of all these Rolexes that we like to buy has skyrocketed too. So luxury goods, recessionary goods, everything has been impacted.
So one last question about that, because we hear about, everybody's gotten very spoiled with what mortgage rates have been.
Oh, yes.
And so the interest rates that are charged by the Fed, we're hearing that they are going to have to make some changes here. So can you describe a little bit what's involved with that and what the impact is and how that, goes about slowing inflation? Because some of that's a little counterintuitive, I think.
Yes and no. I think that a lot of people believe that the Fed is this force that is supposed to be independent of the United States government, but they're typically very in line with U.S. policy, right?
Exactly.
So the Fed does not want inflation to happen. They understand the fact that it's a very dangerous force. So what happens to combat that is one of the arrows they have in their quiver is to raise rates. And inflation is typically derived from an economy getting a bit out of control in its spending, which is happening right now.
Right.
So when you raise rates, you make money more expensive for the average consumer to borrow. Hence, they'll stop borrowing, and it slows the whole thing down. So there have been 5 interest rate hikes that have been proposed by the Fed this year, but there's also been guidance that says there might be up to 7. And we haven't had that happen since the 1980s.
Right.
So it's clear that if anyone's really between the lines, that Powell's a little scared.
Right.
He doesn't want to say it out loud, but there also are a lot of economists that make you feel a little bit better that still believe that inflation is certainly being able to be calmed. So we'll check back in next month and see how things are going, because this is certainly going to be an ongoing issue.
All right, guys, thanks. We'll be back with
next.
another exciting topic on the love side.
Love side.
There we go.